Greetings, Jonathan. Camarda, and a happy abbreviated Thanksgiving Day weekend for all you folks out there. So to start on a lighter note, maybe not so lighter note, perhaps we saw our core CPI come down last week, which we're going to get to. But for Thanksgiving, the good news, the average party of 10, if you will, down to the low 60s from the mid 60s last year, but still up pretty heavy from the low 50s just back in 2021, and certainly higher than that since 2019, for example, pre-COVID. So little good news there on the cost of Thanksgiving. The cost of a turkey as well coming down slightly as well. Just the turkey itself in the upper 20s, like 27 and change. Okay, no more turkey. Hey, watch it out there. As we continue now, with the market news here, again, core CPI down last week. So you saw again risk assets going up. Bonds and stocks had an exhale. Now, again, the things that we're looking at, certainly a weaker dollar across the board, right? We go across it, weaker versus the euro, the yen versus the Canadian dollar versus the bloody British pound, right? So the dollar weaker. And what did we talked about this for months, right? The dollar's weaker. It's almost binary. It is binary. Market higher. Rates coming down, lower CPI, bonds get a breather. Of course, equities, risk assets up. And when we look on a risk on, looking at technologies versus utilities, what I like to look on risk on from a relative standpoint when technology is going up versus utilities or vice versa, that'll give you the direction from that standpoint. Also looking at the option markets out there as the put to call ratios coming down, which means institutional sellers versus buyers. And the old National Association of Active Managers, who, we were a little bit quicker off the back of the pool there as exposure goes, came back up. They're now 70% exposed to equities. One of the reasons why we held to some of our conviction there, again, if you go back to 1950, when the market's been up this much through July, right? You go through July, up on the S&P 500, even though it was overweighted in 7 stocks, we already know that. But when that's up over 10%, since 1950, August through October is a downslide. Sound familiar? And then generally the end of the year, November to the end of the year has been up. Now there's no guarantees of anything, as you know. I don't want to trade this beautiful Brooks Brothers for an orange jumpsuit. However, generally you see an upswing there. Of course, what are the risks out there, right? We got global macro risk. We talk about it. You can watch the news for all of that. We obviously have energy risks. Oil has been vacillating back and forth. But of course, there's always supply concerns, especially when you have some of the turbulence in that region of the world and the such. So there's always that. Those are wild cards. Earnings, 82%, lower 80s rather, again, have been favorable, as far as their EPS, earnings per share, versus what was expected. Revenues and guidance, a little bit lower than that, but still positive from that standpoint. In fact, that's really what it's been, right? Guidance has been somewhat dour. Now, when you talk about inflation coming down, you would think it helps some of the retailers, but we didn't see that one of the bigger ones. We're not going to name it here, but you know what I'm talking about, all right? State of Arkansas, Sammy, all right? You don't even say any more than that without getting specific. Certainly took a hit. Now, a lot of folks think that it was almost priced to perfection. Inflation coming down doesn't necessarily help some of those retailers, which actually make money with some of the costs, especially when you can't go anywhere else. But that being said, that's all I'm going to say. I don't want to overstuff you. Again, there we go. Gobble, gobble, right? Have a great rest of your Thanksgiving week. Enjoy your family. Stay warm, friends, football, whatever you folks like to do. We'll stay eternally vigilant. Again, 'tis the season for the RMDs, right? Christmas specials coming out early. And RMDs, that's what time of year this is. So again, you'll be getting that rolled out. If you haven't heard anything, talk to your personal wealth advisor, personal clients of mine as well. We are in contact and getting that all ready to roll. So you have nothing to worry about as we head into true Christmas season, which I think, what is it, when you get the real trees? Wasn't that like after Thanksgiving? I see trees sprouting up all over right after Pumpkinhead left. Stay eternally vigilant. That's us. Stay frosty. That's you. Until next time, the slightly higher IQ'd Pat McAfee, I think I've been called, of finance, is out. Bye.